Hello everyone, good morning. So it has been a very unusual week for us in the currency derivatives market because after all we have built a very fantastic portion in the local market for the last couple of years, and suddenly the regulator wanted to curb the speculative activity in the currency pairs, especially the INR pairs. So it uh, notified that it is not going to provide regulations for the exchange to continue doing the currency speculation, and it has been a death spiral for a lot of traders because they have taken a lot of speculative options position, and many are cutting down in losses. The losses were severe in some cases for the option sellers, especially in the put option and call option, because even in futures, there is some losses is visible, which is not in the stock exchanges, brokers, or regulations uh, responsibility, especially in countries like India, to look at this. So we have to be very careful at this stage. So I insist friends and colleagues, as well as everyone, to be remain patient and notify. Always look at the regulations before taking anything that is speculative, like commodities, options, stock options, or anything like that. Even in margin trading or in stock intraday, you have to be very careful with this kind of instruments, especially in India. We are not living in the United States, where regulations are very lenient. I think that the RBI has taken a very wrong approach to the speculative activity, because without speculation you cannot get a price discovery. You can get a lot of wider spreads in the bid asks, and you you tend to suppress these activities, um, to maintain a fixed peg. What I say, fixed peg means you are pegging the dollar to the, sorry, INR to the dollar at a fixed range in a band. So it is not a viable thing. We have seen that in the cases of exchange European exchange rate mechanism in the Europe, and also in a lot of countries like Egypt, Turkey, and some of the Asian countries that were using these kind of instruments, like in Thailand, Indonesia, and Korea. But these bands were attacked by the speculators. So a lot of speculators have attacked this peg. And the second, especially a very challenging thing for the RBI to control, is the overseas speculation. So if there is no speculation in the onshore market, so what happens is that people will move towards offshore. Especially as a retail trader, I will move toward the offshore broker and trade INR or trade other pairs. So it is not a big thing. But what big traders, big speculators, proprietary traders will do is that they will move their offices to Dubai and or Singapore and set up an office there. So they trade the non-deliverable forward market. So which is the market that's being traded between the commercial banks and the hedge funds or investors like that, especially living in the overseas. So they just trade using a lot of loopholes. So RBI will have very difficult uh, um, to curb this kind of speculation that we saw in Adani stocks last year. So I think that it's not a very good thing. It has shattered the confidence of the market participants first, and shattered the confidence of financial market people like us, sub brokers or brokers, and also for everyone in the working in the industry for the last 14 or 15 years, who has built this business from scratch. It's a very sad situation. It's a very how can I able to say, it's a very uh, merciless situation. That's the word I have to use now. And it's not what government is preaching right now. And well, let's see what how it goes. But people have to be very cautious on regulatory issues. So that's a very thing that I have to note here. And I will be updating a lot of things in the coming days after April 5. And Matrix has not at all taken any position in the currency derivative market in India, but we have a lot of partners in the overseas, and we continue to do so in the future. Thank you.